Alrighty, so let's take a look at some phase C trades with LC1. Now, by now you should be very comfortable with, when we should be using these phases and how they all work. But phase C is when we are trading counter swing. So if we're getting long, right, we're trading against the bearish swing structure, but we are trading pro internal. So phase C, just like phase A, is generally a decent phase you want to be trading. Usually those trades are medium to high probability. They are when I am almost always considering looking to take a trade. The most simple reason as to why you can remember it in your mind is because both of those phases are pro your medium time frame internal structure. So the reason why that's generally higher probability is because you're trading in line with the immediate price action, right? Those immediate ranges, you're trading in line with that far more often than not. So generally on the right side of the market. Okay, so a typical way in which we want to trade phase C, obviously it's not going to look like this in every single scenario, but we want to stack as much confidence on our side, is after we've had that break of structure, we get that first initial bullish IBOS here. Now this is great to trade phase C because it's the start of the pullback, right? We're playing that objective. Phase C, pro internal, counter swing. We want to be playing the start of that pullback when risk reward is on our side. We're buying in a discount, plenty of room to target up to premium prices after that first initial IBOS. That's it in its most simple terms. Of course, there's other things we can add to it, such as, are we coming off a higher time frame zone? Is this backed up by the immediate higher time frame directional bias too? Do we have a strong liquidation as well in the M15, kind of giving further confluence that potentially we are ready? Because sometimes, as you'll see in the live market, you'll get an initial bullish IBOS and then we'll look to take phase C, but sometimes it's a trap. Sometimes we then come lower before we go. So if we can see a strong liquidation and into a significant level of demand, that's going to increase the probability that this bullish IBOS isn't a full signal, right? But anyway, phase C is a good phase. So let's take a look at some trades. So for our chart here, this example is going to be the one that you would have first seen as the very first trade example I showed you with the LC1 content. However, I didn't go over the actual narrative building for that trade. I just went over the entry model. So here we're going to focus more on the narrative building, right? So for our chart, we can see, just zooming out a little bit, we've had clear bullish structure for quite some time, and now we're gaining a lot of momentum. Of course, we can do some daily analysis as well, but I'm going to keep it somewhat simple for you guys, okay? This one arguably could have been viewed as a swing pullback. It's not quite as big relative to the recent pullbacks, here. So it's a bit of a debatable one, but it doesn't make a massive difference to your overall directional bias, particularly when we're dropping down to the M5 for an entry, right? So after a break of this structure here, we've had a reasonably overextended run, bearish 4-hour change of character, and then we're seeing these nice big strong 4-hour bearish candles, right, really showing that momentum coming in to look to play the pullback to at least this level of 4-hour demand, right? So clear, bearish order flow starting to form. We even have some 4-hour minor supply here that broke the low, haven't drawn it on, but yeah, that would be a valid 4-hour supply zone. So let's just draw on, right? Stop being lazy, okay? But very simple trade idea, hopefully you can see already, is yes, the 4 hours bullish, but this is a good opportunity to play the pullback, right? If we look left, there's no significant demand here for us to worry about really until sort of this level down here, okay? So 4 hours giving us a short-term bearish directional bias. Now, if I zoom out a little bit on the M15, if you can remember from that example, this was an M15 swing pullback here. We then got a swing break of structure. We did pull back and break the low, but it failed to close below the low, which means it's not a bearish boss. Remember, we need a candle body break for a swing break of structure. So it ends up just being a liquidity grab, and then we got another bullish M15 break of structure there. Since we had that bullish break of structure, none of these pullbacks were that significant in terms of size. They were all just internal pullbacks, which means we keep our swing low down here, okay? And this gives us our current swing range once we have that significant pullback. So 4-hour and M15 swing are both bullish, but the M15 internal structure is now clearly bearish, right? So that's a very good signal that we're now playing what? We're playing the M15 swing pullback, at least down and towards this 4-hour demand. Nice and simple directional bias for the session, okay? And then we zoom in even more, and what we can see is this is our current M15 internal range that we are working within. So our immediate directional bias is clearly going to be bearish. We're going to be looking for shorts within this internal range, right? Between these two red lines. if we are taking shorts, that means we are trading pro internal trend, but we are counter the bullish swing trend, okay, which means we are phase C, right? I can flip this diagram to kind of help you visualize that. Essentially, we are trading this, okay? But obviously in this example, we're a little bit lower down. So we're more around here, okay? That's what we're trading. We're trading phase C. Now, directional bias is sorted. So the first thing you do is you've got your directional bias, you know your range, okay? So if you know you want to get short, how do we do that? Well, the second step is to identify the areas of interest, your POIs, your points of interest, of where we can play that directional bias. So we can see that extreme supply zone has already had a very clear mitigation. So then this is going to be the next supply zone we are looking at. Now, straight away, remember what I'm always saying to you is your mind 90% of the time, if not more, should just be thinking about, I'm just waiting for a strong liquidation in the pullback. I'm just waiting for LC2A. Keep it simple. Again, 90% of the time, just be thinking that. In specific scenarios like this, you can think about trading LC1, right? And let's go through the list. A higher probability and higher end of medium scenario. Well, the fact that we are in phase C already puts us in, medium to high probability in most occasions, of course. Just being in a certain phase doesn't on its own make it medium to high probability. It needs to, of course, have other confluence, but generally if you're in phase C, it's going to be generally a decent trade in most scenarios. What makes this also good is the momentum, like big, strong momentum. No significant higher time frame demand. Yes, there's some small M15 demand zones within here, but when you've got such a big range like this, and we start to sell off with strong momentum, this is literally where I pretty much ignore all of these. Like they might give small reactions to play pullbacks. I'm not interested in that. I'm looking now for price to generally make its way down towards a significant level. Okay, so again, this is making shorts high probability. But what's the other key thing for LC1? The key thing is that the internal range we're looking at is a tight / small MTF range, right? That internal range. You can see the lower time frame lid and the lower time frame entry on your screen at the same time without zooming out. Before I even drop down, I know that I'm going to be able to see that, right? Now, yes, we're allowed to use lower time frame lid, but straight away I can see that we've got clear MTF lid here, right? So we've had our POI mitigation. Like I said as well in that first video, you can also be looking at this as your POI too. That's totally valid, right? So let's jump down to our lower time frames. So if we're looking to trade that first POI, we have our mitigation. Do we have a strong liquidation? Well, nothing has formed in the pullback. Okay, none of these highs broke any lows to the left. They're all weak highs, but this is where we're allowed to think about LC1. So take the most nearest level of lid, right? This is a structural high. There we go. Okay, so far it hasn't given an entry because since the mitigation, none of these lows have broken, but now we could place our stop order below this low here, right? This is where the lid liquidation occurred. We get our POI mitigation here. This would have been the first candle. We could put a sell stop below, but prices pushed up higher. So now we have our sell stop below here and whatever buffer you want to use. Now we have an inside bar, so we don't do anything. We leave our stop loss open, our entry on. Another one, just leave our entry on. Now price pushes up higher, so we cancel our entry order. This POI has now failed. So that trade idea is no longer valid. But as we said, right, we've still got this extreme POI, so this is one we can use. And we have nice, clear medium time frame lid. We're pushing deeper up into the extreme, which of course is going to add further confluence. This is even looking better now if you want to trade this idea coming into the strong internal high. So let's have a look. Okay, liquidation of this lid. The PBL clearly has not been mitigated and made a new high, right? It hasn't even been touched, even if you take that wholesale to buy, right? This is completely unmitigated. Therefore, the trade idea is valid. Okay, sell stop below the low. Let's say we're using a 2-pip buffer, 6.5. Okay. And then let's just say we use kind of the crude analysis of 3.3R to get rough net R. That's an inside bar, so we leave our order on. Okay, pushes up a little bit higher, cancel the order. POI is still respected, right? We haven't traded higher, so we can set your entry order in here. And then eventually we get tagged into the trade, and there we go. So I went over this entry model in a lot of depth in the very first LC1 walkthrough video, so watch that if you're a little bit unsure on any of this. But really, the narrative building is kind of the main lesson I want you to take away from this. A lot of you who've been here a while will know that when I see this type of scenario, okay, where we get a big overextended swing range like this, we've had a clear bearish eyeballs to the downside, a lot of momentum, and we're forming these nice small internal ranges. There's nothing significant here to the left. Yeah, there's some demand, but whatever, I don't care about that. Like, it's very likely price is going to make its way through, and this is where you see those strong momentum until we get to these levels. So when I see this is where I want to be as aggressive within reason, within my plan as I can to get involved. Okay, I have very, very high conviction that this high is going to hold when price is pulling back. Now, exactly where that lower high will form, I don't know. But the nearer we get to that high, the nearer we're coming in here, I'm almost just looking for an excuse to get involved. Like, this is when you can consider even just taking a risk entry, right? And whatever. So these are the types of environments I'm going to have to try and just impress upon you as hard as I possibly can of only when you should really be thinking about LC1, at least to begin with, because this is when I'm going to try and be as patient to wait for these environments to even think about LC1, because LC1 is going to happen everywhere and almost every single session, every day, multiple times a day. And you're going to get burnt a lot. Like I'm going to keep saying, you're going to get sick of hearing me saying it, but I'm going to have to keep saying it because I am very concerned that I'm going to see all sorts of madness in the Discord with less experienced traders just taking it because they feel that if they see the entry model, therefore they must take the trade, which of course, as you're more experienced, that is the furthest thing from the truth. But this is a almost perfect example. I couldn't almost find a better example of when I personally will be considering LC1. Okay? Literally come up into the extreme of this POI. There's nowhere else for price to go at this point. Like even if you're still doubting whether you should take LC1, at this point here when price pushes all the way up to here, there's no room for an LC2A to form now, because if we get the bearish chalk and we get the fake break, for price to come up and liquidate that high, the POI would have failed, and technically that's not a valid entry. So really there's no other way for me to now get involved other than LC1, especially if you see price and start coming down. Like, do you know what I mean? I'm going to take that all day long. Okay? So yeah, very, very clean phase C. Nice big overextended swing range when you get this price action. Price starts selling off with momentum. This is go time for me to get involved with those phase C trades.